Hi everybody, this is Gary Dean and this is our nightly video report for Wednesday, August 24th, 2016. So we've had yet another gap up failure, and as I've said, every one of these has pretty much failed. As we got into the later ones, like here, they've failed miserably, where we actually, from where we gapped up, we actually took those lows out. Well, today was no different. We gapped up yesterday. From there, we took out those lows. And I think what it's really shown you is just how exhausted this market is. It can't move higher on, during regular business hours or when the cash markets are open. So they try to do all the work when the cash markets are closed, and they can manipulate the the algorithms to move the S&P futures wherever they want, and they can do that through just moving different currencies. It's all they have their formula in place, but it's never a safe trade, because eventually that easy money trade ends, and when it ends, you get everybody caught up top, and when they're caught up here, they start getting panicking. And the thing is that we had a little bit of a short covering rally towards the end of the day today. But the thing is, once these lows get taken out, there's going to be just outright real panic, and that's probably going to take us right straight down to this, all the way down to the 2146. And this is where, when it breaks, if this breaks here, that's when we start coming down and start testing these levels here. Now, we have the 5 waves up, just a typical retracement from this level, and this is a bullish case, is 2092 all the way down to 2034. So this is why I've been saying, even just say from here, going all the way back to July, we were at 2080. You had, 13 points on the upside, 14 points on the upside, and the as far as the risk on it is that it's coming all the way down here, and that's just because of the bearish divergences, the wave counts, the pattern that's in play. The risk, the ultimate risk, is that this pattern is done, and this is a wave 5 of a wave 5. And we're retracing all the way down to this level here, which is the pattern. And if it plays out this pattern, then it's going even further lower than that. But that's a bit of a little bit of a long term, and I'm not really worried about it right now. What I want to make sure is I want to see the bears push it through this 2167 level. And more importantly, this 2146. If they do that, that's when the bulls are going to have to start defending the 2116, 2100 level. And the thing is that with let's say the sideways action that we've been going through here, there's a lot of shares that are owned up here. So if we start taking out some support levels, this is where I'm talking about, where it's these algorithms that have been bidding things up, when they're all in and now all of a sudden they all have to get out because they're trapped up here, this is when we get these huge moves. So I don't know if today started it. Some major support levels did not get broken yet. I think really the first one is going to be this 2168. So we have to see how the how the bulls react there. And if they lose that, then we're going to have to see how they react at 2146. These are the two important areas there. You can see we have plenty of room to go before we're into the oversold levels here. And these bearish divergences have really been taking place since June, and even longer than that if we're looking on a daily chart, because they really started all the way back in April. So my point is this, is that, yeah, it's been frustrating. Yes, we've gone sideways, but one thing that I've said is anybody that's have been trading a consolidation pattern to the upside has had to deal with lower lows, and most of them have been trapped all the way up here. So this was the Brexit. It was 2 days. They gobbled it right back up, and we came back up again. It's not going to be that easy, especially when we start taking out some support levels, and that's why I'm saying we could see 2150. We could even see lower than that if some of these levels start giving way, because the average say ownership of the S&P or the market is is all the way up here, and that's, it's one of those things that it's been frustrating because we have not gone down. But from here, you're, like I said, 14 points to the upside, and you're risking close to 200 on the downside. And that is not a risk reward that I want to be taking. And yeah, I would have loved for this market to go down a while ago. It would have made my life a lot easier. But it's a market. And really what you have to look at is that from let's say when we had this bust up here and then started going sideways, we really have not gone anywhere. You had to endure 14 points to the upside, but it was more the time part of it. So, like I said, let's see how the bulls react to that 2168 level, and then the 2146, 2140 level. If they lose that, that's when I believe we start seeing the algorithms jump over each other, and I would not be surprised to see 2050 in a very, very, very fast manner. So let's see what plays out tomorrow. Enjoy your night, and I'll talk to you guys in the morning.